Welcome back to the channel. Today we're diving into an important topic that affects homeowners, renters, and investors alike, the 2025 Canadian real estate outlook. Whether you're thinking of buying your first home, selling a property, or just curious about where the market is heading, this video will give you a clear picture. So grab a coffee and let's get started. Let's start with the big picture, Canada's economy. Experts predict that Canada's GDP will grow by around 1.7% in 2025. This slow but steady growth means the economy is stabilizing. Now, interest rates, one of the biggest factors in real estate. Interest rates have fallen down 5 times consistently in the last 5 months. The key interest rates today is at 3.25% and it is expected to decline again in 2025, where the key interest rates are expected to be at around 2.25%. This is good news for buyers and homeowners with variable rate mortgages. Example, if you're someone who hesitated to buy a home in 2024 because of high interest rates, 2025 might be your chance to get a slightly better mortgage rate. Now let's talk about home prices. According to real estate forecasts, the national average home price is expected to rise by about 6% year over year. Single family homes could see a 7% increase, while condos may rise by 3.5%. Why the difference? Well, many buyers are still drawn to the larger homes with more space, especially if remote work continues. However, condos remain a more affordable option in cities like Toronto and Vancouver, where the home prices are sky high. For example, in 2024, a townhouse in GTA averaged around $800,000. By late 2025, it could be closer to $850,000. Meanwhile, a condo that was $600,000 might rise up to $614,000, a smaller jump. Government policies will continue to play a big role in shaping the real estate market. Some key changes include, number 1, 30-year amortization periods for insured mortgages, which means buyers can stretch their mortgage over a longer period, leading to lower monthly payments. Number 2, the mortgage insurance cap is being raised from $1 million to $1.5 million, allowing buyers in expensive markets to qualify for insured loans. These changes aim to make home ownership more accessible, but they also fuel demand, potentially driving up prices in certain areas. Let's shift gears and talk about commercial real estate. After a few tough years, the office market is showing signs of recovery. Vacancy rates are expected to peak and stabilize as companies reevaluate their office needs. However, the demand for office space isn't just about size anymore. It's about quality. Companies want modern, sustainable buildings that offer flexible workspaces and amenities. Retail spaces are also bouncing back, especially in suburban areas. Low vacancy rates below 4% show that many retailers are expanding again, but not always in the traditional mall format. Instead, we're seeing more small format stores and pop-up locations. The industrial sector is facing an interesting shift. While demand for warehouses and logistics centers was extremely high during pandemic, things are starting to cool down. With more supply hitting the market in 2025, the industrial real estate sector is expected to normalize. However, specialized real estate like data centers, cold storage facilities, and student housing is becoming more popular with investors. For example, think of it this way. While large warehouses may not see the same price hikes as before, a facility for storing vaccines and frozen goods might become a hot commodity. Of course, no market outlook is complete without looking at the challenges. Housing affordability remains a top concern. Even if interest rates go down, home prices are still out of reach for many Canadians, especially in the cities like Toronto and Vancouver. Another challenge, economic uncertainty. If inflation spikes again or we face a global economic shock, it could slow down market recovery. And let's not forget about geopolitical risks. These can impact everything from construction costs to investment activity. So, what does all of this mean for you? If you are a first-time homebuyer, 2025 could offer some relief compared to 2024, but you'll still need a solid plan and budget. If you are a homeowner looking to sell, it might be a good time to list your property, especially if you own a detached home in a growing market. For investors, it's time to think long-term. Diversify your portfolio and keep an eye on emerging sectors like data centers and student housing. What do you think about these 2025 real estate projections? Do you think the market will stabilize or are we in for more surprises? Let me know in the comments below. Don't forget to like this video, subscribe to the channel and hit that notification bell so you don't miss our next update on all things real estate. Thanks for watching and see you next time.